Good morning, Chris. What's up?
Hey, I'm good. How are you?
I'm doing great. I'm Brian Jones. I'm here with professional trader, world's most interesting man, Chris Hood.
Anytime you say that, man, I start getting a little bit shy. I'm looking around like, where is this guy?
That's
Can't
all
be
right.
me.
It's you. It's you, man. It's you.
Hey, man. I don't know, man. I think you got to get out more. I really think you need to fraternize with more people because your definition is really weird. Anyway, good to see you, man. You're looking better.
Thank you. I think I'm finally fully recovered from COVID, but I still have this like a little bit of lingering fatigue, but hey, it's better than what it was. What do you
COVID's nasty, man. It's
It is.
nasty.
It's not a good thing. Um,
Oh, no.
so are we about to rally? Are you ready to go all in?
No, not yet. I think that the rally might be done. We were so chronically oversold.
Mhm.
There was just nowhere to go but up. I mean, we were drilling for oil. Literally, it was just so deep in the oversold side that, a rally was imminent. I think you've got to be careful because what we're trying to do now is establish a range. And ranges are hard to define because you could take a bet that the market's going to rally now to all-time highs, and it could. There's no one knows if it will or won't, but it could do that. It could also reject at certain key levels, and that's what we're trying to see: is how will it react at certain key price points, certain levels. If it can break through key levels of support and resistance, then we have the makings of a potential, reclaim of all-time highs. If we don't and we start falling back, then at least we know where the ceiling is, and then we can start trading to the other side, right? So this may just be a reversion to the mean rally. We were so like -3 ATR on pretty much everything. I mean, when I mentioned a couple of weeks ago, that we were looking for green shoots to start appearing in our table for where these things are going to turn around, and what you're seeing now is a lot of 15-minute squeezes. 15-minute squeezes, when they fire, they don't last for days. These things are only going to last for a couple of hours, right? What we really want is those squeezes to then translate into higher time frames, and then when those higher time frames start moving the day chart and then the weekly chart, then we have the thing. So I'm not going all in just yet. I think that like in any gambling game, you don't want to show your hand too early, and a lot of traders, particularly retail traders, will tend to sort of over interpret things, right? They'll take the first sign of a green shoot and go, that's it, everything's turning around, and then suddenly they get kicked in the nuts, lose everything, and they're like, damn, I got face whacked again. So
You have to obviously the position sizing is critical on
oh yeah.
the turnaround, but you have to be. Is this what differentiates aggressive versus conservative traders, or smart versus stupid traders? I mean, you know what I mean?
I think you can be aggressive and smart, and you can be conservative and stupid. Like
Right. No, okay.
you can get, yeah. A position sizing, you've seen how I trade. I don't trade big numbers. I'm not comfortable with it. I mean, every person that I know has their own level of comfort with small accounts and stuff. I mean, I do the same thing year after year. I trade a small account, I grow my money, take the difference out, and go back to building the small account. I don't really like trading big accounts. And I think if you start with a 10 grand account and you just make 10 grand, and then you take the 10 grand, put it outside, and carry on playing with a 10 grand account, it gets easier year after year of just doing the same thing. I don't think you should try and do the same strategy. If your mental comfort levels haven't been adjusted, it's very different trading a $1 million account compared to a $10,000 account. Very different psychologically.
What's the difference psychologically to you? I mean, it just seems like a matter of scale and percentages, but why?
Yes.
Why would it cause a problem psychologically?
Because some people have a thing when your trade goes wrong and suddenly you see -5,000, on a trade, let's say, where the equivalent, say, in a smaller account might have been -500. Some people just have this emotional connection to that 5,000. Damn, 5,000, as opposed to, oh, it's okay, 500, right? It might be the same thing percentage wise, but the number is just dramatically different. Yeah, sometimes trading is just a matter of scale. It depends how comfortable you are. Every person is different. I know some of the most successful traders that I know trade small accounts, and they enjoy small accounts because the techniques that they use and the strategies that they use are very much applicable to those small accounts. They enjoy trading those trades. So you
don't
if
have
you take
giant,
a large account,
you don't have giant, you don't have giant positions in small accounts. It was probably liquidity might be an issue if you've got, if you're trying to go 100 contracts or something like that.
I mean, I've done a couple trades in my career with 100 contracts, 200 contracts, and I can tell you something. This beard goes a lot more gray when you're doing 100 contracts, regardless of the size of your account. So no, I mean, there is an element and there is the conversation that says, well, it's the same thing. Percentages are the same things, right? But some people are just not comfortable with it. And it doesn't mean they're right or wrong. It doesn't make them bad traders or good traders. It just means that's the scale that they are comfortable with, right? Remember, you've got to trade to your level of sleep. All right. If you've got a 200 contract position on and you're carrying it overnight, how comfortable would you be? Would you sleep well? Would you not? I don't know. I mean, I wouldn't. Whether I had a $50 million account or if I had a $5,000 account, I still wouldn't trade comfortably if I oversized the position. All right. So it comes down to that kind of comfort level.
Right.
So, aggression, conservative, some people mistake aggression for stupidity.
I would think too, if you, and I mean, this is not a knock on anybody who's, essentially got money from their family or whatever, but if you're sort of kind of born into money where it's not a big deal, it's never been a big deal for like what would be a big deal for a lot of retail traders that have made their money, then the loss might not be that. I could see the loss not being as impactful as someone who's traded a small account up to a large size account and then kind of freaking out, as opposed to somebody starting out with a few $1 million in an account just to play with. And
there's definitely a degree of what you can add is aggression, stupidity, or aggression, conservative, stupid, clever, reckless. There's a thing around reckless trading, and reckless trading is the biggest problem for people with money, because people with money or with bigger accounts tend to trade in a far more reckless way. They don't plan, they do random stuff. I had a client the other day who called me. They wanted me to help them. They had been involved in a Discord server, and they'd been trading planless, right? They'd literally been listening in on this Discord server, and they'd have some guy going in going, oh, I've just made 5,000% on NVIDIA or whatever. And then they would go, oh, I better go and do NVIDIA, and then they go to NVIDIA, they traded NVIDIA. If they went the wrong direction, the same guy came back in and said, oh, I just scalped puts and I went down, I just made another 5,000% or whatever it was. And the client had actually lost on both sides, right? Because they were always going against it. And I was like, this is why you don't trade in rooms where you don't know who the person is on the other side, because you don't know what they're doing and you don't know their plan. You can't. Trading, particularly day trading, is incredibly difficult to copy. It's incredibly difficult. So, the trend now is for a lot of these rooms, hey, listen, we're a community of 5,000 people. I'm like, yeah, you might be 5,000 blind people. Yeah. I want to know where I'm going. I don't want to be following 5,000 people I don't know, number one. And number two, I don't want to be taking trades from others that I don't understand how they did them. So it's really important, because that's reckless. To me, that's reckless. And, I discourage people from that.
You could be in the room where no one knows what they're talking about, or when a couple of people know what they're talking about and are trying to create positions that are beneficial for them, like pump up stuff, or like when somebody tells you they won this, that already happened. That's not really a signal to get into the trade.
I see it all the time. I usually get the the impact afterwards, right? And I just say to people, I discourage it. I don't think it's a meaningful way of learning how to trade. I don't think sitting in a group of 5,000 people where people are, it's more of a bragging room rather than an educational room. You don't learn that way. You know, where you learn is by paper trading your strategy. If your strategy is going to be, I'm going to trade every time this line crosses this line and this happens, when it's, you know, I'm going to trade this, this, and this, then do that 20 times. And then you know that, you know, your setup probably works. You know, use the back testing capability of platforms that are available. Use a system that can be worked for you, right? Don't sit in a room and go, okay, I'm going to now try and work out from the 5,000 members in this room who the guy is that I should be listening to. And I'm going to put a little star. So every time he says something, I'm going to follow it like it's the gospel. Yeah, that's not going to work.
I was, you know, just doing some reading about different, you know, professional traders and pretty successful traders. And I was wondering if, you know, of course you've got these funds or these traders that create the systems, and they just have people working for them on their systems, and they're not really allowed to deviate from the systems. And then you have, you know, the people who are just sort of trading on their own. Do you think that you could get, it would be disruptive to your trading to say have, you know, 500 people with different trading styles, all successful ones, like chatting about the trades that day? You know, it's better to kind of stay on your own.
You know, a lot of people will do this. You could have the world's best trading system in your hands, all right? You could have that. But you hear someone else's success. You might have just gone into a bit of a losing streak. You might have lost 4 trades in a row. So now you've actually sat back and said, no, maybe my system doesn't work. Now you find someone else who's going, oh, look at me, I've got 20 in a row, you know, and you go, oh, well, maybe his works. He's not going to tell you what he's doing, right? He's just going to give you the result. So you've got to try to figure out what he's doing. So now you take your great trading strategy that's not going to work. No trading strategy works 100% all the time. You've just hit a 4-trade losing streak, right? That's normal in any trading system. That would be pretty normal to hit a 4 to 8 losing streak, right? That's normal. Okay. If I hit a 10-trade losing streak, I go into my data and I start adjusting things. I don't sit there and go, oh, I'm just going to keep doing it, right? 10 trades for me. I stop, I go in, I make adjustments, and then I fix it. So you've lost 4. You've now trying to work out what someone else is doing, but your strategy might actually be the best strategy around. And I'll actually use a demonstration here. Let me rather show you this in paper, because this is the way I do it. Hopefully this will help people understand, you know, the impact of being able to back test things, right? So I trade on a number of setups, and I've got signals that I use, right? So I'm going to switch on my squeeze trading tool, right? So my squeeze trading tool at the bottom has a 55% win rate and an amplitude move of around 1.6. So what that means is it's a fairly decent profit-taking system on a 30-minute chart, right? So there you can see 30-minute chart. This is on QQQ. Now the results will be different depending on the stock that I'm trading. So if I put on SPY, you'll see the numbers will adjust at the bottom. So the numbers will change. You see how SPY has a slightly higher win rate on the same settings, okay, on the same settings. So if someone comes to me and goes, oh, you know what, I'm going to trade SPY today. You know, I know that if I took every trade on SPY where it said long, okay, not these other red signals here, but where it says long, I know that by and large, I'm going to win 65% of the time. Now, the profit-taking move is not going to be that big, all right? Now, remember, I'm trading an intraday chart. So the tool that I've built allows me to back test the exact settings that are going to work on that specific stock, on that specific time frame. So if anyone comes to me and says, I trade such and such a way, I can put it through my filter and I can see how successful that trade strategy is. Now I can switch this off and I can go to a different trading strategy. So now I'm looking at moving averages, right? So in this setup, let me just put this on again. If I go to moving averages, and okay, let me just take that off. All right, so for moving averages, what I'm looking here is an 813 crossover on the simple moving average. Now, most people will read a textbook and they'll go, oh, you know, the 813 crossover is what this book said needs to work, right? But I know from my back testing, if I take off all my controls, back testing the 813 crossover on the 30-minute chart on SPY only has a win rate of 36.6%. So why would I trade this? All right, if I just, let me just change that now back here. Sorry, that was on the day chart on the indicator. Let me just put this back to the 30-minute chart. So here, trading the 30-minute chart crossover of the 813 SMA has a win rate of 40%, slightly higher amplitude of move compared to the squeeze, right? So we saw the squeeze at a 36 and a 1.1. This one has a 44 and a 1.3. So which tool would you use to take your triggers? Would you use the moving averages or the squeeze? Totally depends on you, all right? So every time you see a green column, you would enter, and every time you see a gray column, you would exit. Now, I've got a number of signals that sit here on the screen, all right? So here, when we have a candlestick pattern that looks like this, where we've got a divergent low together with what we call a trend oscillated buy signal, we get a signal to enter, right? So these are like early warning triggers. So when I see this signal, I can enter a trade. I can enter a trade on my scale in order as well. I can take profits on my blue, on my red. So depending on what I'm doing, there'll be different signals coming at different times, and it all depends on what I'm going to do. But I'm not going to be listening to a Discord room saying, hey, I've just bought this. Okay, why don't you tell me ahead of time? Like, I'd rather you told me 30 minutes before you did a trade that you were going to do a trade so I can get in. Don't tell me after the fact. Like, I often get quite amused when I watch people advertise their success, because why don't you tell me up front? Right? Rather tell me up front, rather tell me before you do the trade, this is what your expectation is going to be, and let's see how good it is. As opposed to telling me after the event where you say, hey, look at this great trade I did, but you don't tell me about the 15 trades that you screwed up on. And I don't really know what your trade strategy is. You're just telling me a result. I have no context.
That would be like me. That would be like me advertising a basketball service, right? I don't play basketball very well, and it ends with me, throwing the ball over my shoulder, and for the 3-point line,
yeah,
hitting this perfect net switch. You know how long it would take me to film that? All the edits you would not see, all the losses you would not see before that happened.
So this is why trading, unfortunately, it's become a bit of a, no offense to anyone who might sell used cars, but it's like a used car sales lot, right? You walk into a used car sales lot and everything is the deal of the day, right? Everything is advertised as the holy grail. It's the best car for your money, blah, blah, blah. I mean, no offense. I don't mean to offend anyone who sells cars, but that's what it's like, right? Everyone's got the best of everything, until you drive it. All right, then you suddenly you're like, ah, shit, these seats are uncomfortable, and this doesn't work, and the steering wheel can't be adjusted, and all of that. That's what trading strategies are all about, right? That you have to be comfortable when you trade it, right? So if you don't know what your comfort level is for signals, you don't know the speed at which you want to trade, you don't know anything about the previous successes of trades, all right, this is really important. I would want to know, if I'm going to do a trade setup, I would like to know over the past 2 years, how many times has it worked? Don't just tell me about that last winning trade you had. That could be luck for all I care. Could be luck. Tell me about how many times it's worked over the last 2 years on that time frame. Now you're getting to a level of understanding setups that's going to work for you. And if you look at it and you go, you know what, this setup, this 813 crossover, let's just add some risk controls to it. Watch the number of trades. We went from 411, we went down to 237. We didn't dramatically drop our win percentage. We, didn't really improve our profit factor, but we controlled our risk a lot more. We added a new criteria to our trade. So it allows us to stay safe in the trend of the trade. Most people won't tell you that, all right? But you need a system to tell you whether that works. You also then need to know, well, if it dips, can I buy the dip? Because everyone tells you to buy the dip. So in certain trades, buying the dip may not work. It might not be beneficial. So here we've added buy the dip. In the past, if you had bought the dip, it reduced the effectiveness of the trade, but it increased your amplitude of the move because you were buying in at higher prices, but it didn't mean you won on every time that you added into the trade. So sometimes you have to, plan your trades ahead. All right. So for SPY, if you're trading on a 30-minute chart and you want to trade the 813 crossover, you just need to be comfortable using the setup that's going to give you the time frames that you want. So here, if I'm going to trade it, there you can see strategy entry, strategy exits. There's the entry, there's the exits. So this move that we would have been trading now, you could have entered on this aggressive signal down here. You could have had 1 contract, 2 contract, 3 contract, and there's your final entry, 4 contracts. You could have been trading 4 options from here, 4 trades, and you would be in the trend, right? So knowing up front what you want to trade, how often you want to trade it, how profitable it's been in the past, what's your expectation of winning, okay, really important. Doesn't mean just because it's got a win rate of 40% that you're not going to make money. It just tells you this is what you need to expect. It's not going to win every time. There are very, very few setups that win every time. We can move this around. We can look at different types of signals, right? So you see these green and red things at the bottom here, these blocks. We can move these around and we can say, okay, well, what's the best signal to be trading on SPY? If we look at an 814 SMA with the hull or with the weighted, here you can see I've got a win rate that's quite good. That's a decent win rate, but I'm not going to get big amplitude of moves. So I have to manage the trade effectively. If I change that, just a simple change of the moving average, look what happened. If I move it from the weighted to the hull, watch the number at the bottom. You see how my win rate went up and my amplitude reduced? See how it changes? All of these factors become part of your plan. So you always want to be trading the setup that's going to work the best for you. So now I've overlapped this together on the SMAs. Now I know with this one here, my win rate's low, right? My profit factor is not very high. Doesn't mean I'm not going to make money. It just means I need to manage the trade a little differently. So, when you start playing around with the setups, here you can move these things around so that you're getting different signals. So there you can see buy, 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 buy. You had 5 buying signals on the 30-minute chart for SPY yesterday. And that was after that massive correction back down to the VWAP, right? So when we look at a slightly smaller time frame, you'll see yesterday, this sell-off that we had was pretty brutal. This was quite painful when you look at it like this movement from here coming down towards the VWAP. That was terrible for guys that had gone long somewhere up here. Those guys would have all been stopped out. We got a buy signal right at the bottom. And look at how many strategy entries we had. We had some exits as well with some volatility, but we're still long, right? Still long.
What levels, what kind of key levels are you looking for, let's say SPY or QQQ to break through in order to get bullish again on it?
So one thing that you've got to have is you've got to get through these zones that are sort of untested, right? So I know that if we can break through above yesterday's high, we're going to hit some resistance up here between 452 and 453, expect some choppiness. And then once we get above 453, all bets are off, right? Then, the next level of resistance is up here to 479. So, it can happen. I'm not overly, I don't really care which direction the market goes. I trade in both directions. It does what it does, right? I don't like predicting anything because I'm often wrong. I'm an economist by trade. So I'd rather say to you, what, Brian, if you ask me where's the market going to end in March, I would probably say, Brian, if we put on the day chart and we just reset this down, the market will end in March somewhere towards this side of the page. So the market's going to be here somewhere. It's going to be around here. There's the end of March. So it's going to probably end on that vertical line. What the horizontal, on that horizontal where the vertical intersects, but what price level? No one knows. No one knows. And if anyone tries to convince you otherwise, I often find it funny. There are a couple of large groups on Facebook where people trade different things. I go in there for some entertainment, and you sort of listen to these people predicting things. The market will do this, the market will do that, the market will do this. And I always look at it and go, this is not going to age well at all, because no one knows. If anyone tells you that it's, based on some mathematical formula from Fibonacci, and this is what's going to happen, when people become too, centered around that predictive element, and you're going to lose, so don't just trade what you see in front of you. If you've got your signal set up to tell you to do something that it's worked before, just follow that. Don't try and over intellectualize.
Right.
Never going to work.
Now, I was just curious, but I always appreciate your level of caution and your disclaimer that no one really knows. It's one of those things that I like about your coaching and your products and everything are that you don't it's just certain honesty, because people who say they know everything almost never do.
Yeah. Look, I learn every day. There are nuances to trading that cannot be defined in books. They cannot be written about. They come from just doing thousands and thousands of trades. I think last year I did just over 12,000 trades. And, of those 12,000 trades, and those were all manually done. 5,000 of them were done off book. Those were paper trades. 6,000 were done in my account. You learn, and you learn from your mistakes. The most important thing is, and this is how I like to teach, is I will make the mistake. You pay me to learn those mistakes without taking the price. That's the key. If you can avoid the mistakes that other people have made, brilliant. That's what trading and coaching is all about. It's not about just, here's a winning trade, take my alert. No, I want to teach you how to create those trades for yourself using the same tools that I've got, where you can back test it. And if you're not comfortable with a win rate of 30%, don't trade it. That's up to you, So
nice.
Facebook moving bullishly. Here's my day trading chart, just so that you can see it. I have all the stocks that I want to day trade up on my chart, up in my boxes. And that's it. Once you've got a process and a methodology, just let the system work for you. Don't try and overthink things. When I see people that have never traded before getting overly complicated, they don't have tools, they copying this guy, they're using this book that was written in 1981. The market's different now. What you've got to do is have tools that are going to work, and you've got to be able to back test those tools, and just avoid all the breakage. I do find the whole trading thing, it's very vulgar. It's like, people tend to think that the only people worth listening to are the ones that have had big accounts where they've made millions and millions. I go, no, some of those people cost you money. What you should be doing is paper trading a strategy, testing it, making sure that it fits your emotional makeup, and then just being consistent. Don't just because someone made $1 million on a trade that they were lucky on, ask them, how many times did you lose $1 million? To make $1 million, you might have lost 5 million before. So, it's just about ask the right questions. Don't be fooled into stuff. I remember when I first started trading, everyone was a better trader than me, and I got suckered in. And I don't want that for my clients or my students. So I just want to make sure that they've got the right tools. I want them to make sure that they've got the right emotional profile when they trade, because this is an emotional game. You are going to win and lose based on the ability to control your emotions. So, you can see some of these things in the background, printing in real time, like here on, what is this one? NVIDIA. You can see NVIDIA, this is a stock I want to trade today into a zone of support or resistance. It's got a white candle printing. This is the 1 minute chart. So, momentum is strong. We're going to break up above VWAP. If we can get above that blue dot, we're going to move there. Break above there, we're going to move there. So, white candle often predicts higher prices within 3 bars. Now we have a sell signal because we have a crossover of our trend oscillator. There we go. So prices will come down, but you got to wait. So once the signal closes, once it closes into the next bar, so 40 seconds, if that signal is still there in 40 seconds, we'd have to exit the trade. And then you'd, wait for the next setup. So everything that you see on the screen here is very, it prints in real time. There's no repaint. We don't change our signals based on, changes in candles. So you'll see the color starts to change. There's the sell signals back. We've got 20 seconds. Will that signal break? Will this break below that resistance line there? It's broken. We'll have to see 12 seconds. And it will tell you, this is how you define direction of a trade, right? So now with NVIDIA, it looks like it's going to be moving back down. We could see NVIDIA come down to this yellow line here, which is the weekly VWAP. There you can see sell, it broke. Now we close the trade. We're out of the trade. Now you would carry on and you wait. So this purple candle indicates lower prices. So now we have a white candle printing. So that's a divergent low, which means prices will rise. So we might find support here. Let's see. And there you can see you've got S&P on the far right or far left. We've got a scale in order. So if you were trading S&P, you could be looking to add 1 contract to your trade. Here's the Qs. There you can see Qs breaking above VWAP. Let's see, Facebook blue candle, price will rise. So we've got to wait 15 seconds. So this is how my system works. I pick what I'm going to trade. I know the options I'm going to be trading. And now I just wait for the signals to appear, and then you go and do it. And then, this can work on any time frame, any asset, works on cryptos, works on anything. But it's a setup. Right. And being able to plan ahead gives you so much more clarity and comfort when you're trading. You don't have to oh my God, what did he say? Did he just say something else? Oh, let me go and get that. Oh no, he just made 5,000. Oh, you don't want that sort of mess.
Perfect. Well, awesome, Chris. Well, I'm gonna let you get to your trading day and
thanks, buddy.
Day trading. Best of luck to you today. Hope you kill it in the markets. And
right, my friend. We'll talk soon.
Talk to you next week. See ya.
Take care, everyone. Stay safe. Ciao.